Budget review autumn 2021 for property investors. Stamp duty, capital gains tax, corporation tax for those who've incorporated, income tax, annual investment allowances, and business rates for commercial property investors. Stay tuned to find out more. Earlier today, I released a video predicting what today's budget was or wasn't going to hold. Now, I predicted there'd be no changes to stamp duty. Tick, got that one correct. Capital gains tax, I predicted no changes, or at very best, just an amendment to the capital gains tax allowances. Again, correct, no changes to stamp duty, contrary to market opinion. Corporation tax, again, I predicted no changes, as in increases to corporation tax. Again, correct, no increases were announced. In fact, in the long term, a reduction was announced in terms of corporate taxation. Income tax, for those landlords who are still sole traders, there was no good news, there was no tax breaks, there was no getting rid of Section 24, and there was no tax reliefs announced to make things better for you. Got it wrong. Pensions. I predicted there might be a tax raid on people's pensions. That was not announced today, but that is something to watch for in the future. Business rates. Again, got this one wrong. I predicted there would be no change to business rates because timing was wrong with too many other things on government agenda. What Rishi has announced is a reform of business rates where they will be reviewed every 3 years. Bigger thing if you're a commercial property investor or if you have commercial tenants, what they can do is enhance their property. They can enhance the property as a commercial property investor or as a tenant by extending it, adding air condition, improving the property, all of which would traditionally attract higher business rates. Rishi Sunak has scrapped that. What Rishi Sunak has also announced to support the retail, hospitality and leisure sectors is a 50% reduction in business rates, up to £100,000. Now that's quite a big saving if you're a retailer where it reduces your business rates bill. So let's have a look at some of the other things that came in today's budget. Levelling up was on the agenda. It's been in planning, it's been in healthcare, it's been in education. It's all about levelling up is the agenda of 2021. Now, today's budget, quite a large number of towns were listed as being beneficiaries. A lot of them in the north, a lot of them held by Labour candidates. So Rishi Sunak is truly trying to level up the country by pumping funds in to buy future votes. Inflation. In previous videos with other colleagues, I've recorded interviews on my predictions on inflation and that this would not result in either tax increases or interest rate increases. Rishi Sunak made clear he wants controlled inflation and that the inflation that we are suffering is beyond our control. Fuel prices, energy prices, shipping, these are things outside of our control. So what Rishi has done is said he's not going to heap more pain on us. But as a result of leaving the EU, he would remove the shipping duties that the EU used to make us charge for our imported goods. Now that has a benefit of controlling inflation on imported goods. Interest rates. He sent a clear signal to the Bank of England that he does not expect interest rates to be going up and that interest rates, although they can be used as a tool to control the inflation, now is not the time to be doing that. Employment is up. That's a positive, and wages are up, another positive, where as a result of that, it is pumping money into the economy and taking costs off the Exchequer from benefits being paid. Now that helps the economy because if somebody's in employment, they're generally paying income taxes, which puts money into the coffers rather than taking it out if they're on benefits. And again, tax receipts were up, which links in with the employment, it links in with the inflation, and it links in with the economic growth that was being shouted about today. Now, how does that affect a property investor? Well, Rishi Sunak has announced investment in research and development in addition to the super tax deductions. Now, the super tax deductions were announced in March 2021. And if you're a commercial property investor or you invest in serviced accommodation, hospitality type properties, then you can benefit from the super deductions. If you want to know more about that, message in the box below and I'll record a detailed video helping you with that one. He's increased the research and development tax credits that are available up an additional £22 billion, which is a 50% increase. So that is all good news if you are looking to invest in your business. Now, the other big thing that came out was a simpler, fairer tax system. Now, we hear this a lot from chancellors, but what Rishi was doing was laying the blame at the door of the EU on a number of occasions, stating, now we're out of the EU, we can simplify our tax, and gave examples of beer duties, import duties, and so forth, where you could benefit. So nothing directly there for tax investors, but corporate tax. Banks are to suffer an additional 1% corporation tax charge, and the banking levy is to be reduced. Now, in my predictions video, I mentioned that the Green Party were lobbying for landlords to be hit with a super tax levy, just like the banks, but it was absent from Rishi's presentation. So what I think is the Green Party, you got it wrong. It does not support the economy. It does not support people. Bonkers idea, but we'll see if it ever comes in. So the annual investment allowance, which is investment in plant and equipment in your businesses, that has been extended from December 2021, when it was due to expire, to March 2023. Again, in my predictions video, I said I predicted this would be a budget about investment. It was not a budget about tax raising. And because it wasn't about tax raising, that is why the expansion of the business rates was extended. That is why the corporation tax rates were not put up. That is why the encouraging people of universal credit and into jobs, the taper relief has been cut back. So you keep more of what you earn, therefore encouraging jobs, encouraging activity, and reducing expenditure on the Exchequer. So from a property investor's perspective, no news on stamp duty in terms of no extra costs, no changes on capital gains tax, no Section 24 relief, no increases in income tax, benefits if you are investing in commercial or the serviced accommodation sectors, and benefits if you have commercial premises. So that is our quick 10-minute roundup. Drop your comments below what you would like to see happen in future videos, and I shall get those videos produced for you. Thanks for now, and if you're not already a subscriber, please hit that subscribe button and share with your friends on social media so your friends can be better informed and educated. Goodbye from me, I'm Andrew Roberts.